Hello and welcome to my channel Wonders of Price Action. This is the series of monetary policies of central banks. This is the seventh central bank that I am going to, and after this the last will be Fed. And next time, all the monetary policies, when published, will be shared with you in an analysis. So, Monetary Policy Report October 2023. Higher interest rates are working to ease price pressures in Canada and inflation is coming down. Though progress to the 2% target is slow, the bank projects that inflation will stay around 3.25 until the middle of 2024, returning to target in 2025. They are very confident that they are now. This is the opening statement here. I have seen the now we are going to because I downloaded this PDF file, but this is very long. So I want to that we go through the now what is here. This is the yes. Bank of Canada maintains policy rate continues quantitative tightening. Quantitative tightening. Okay. This is yes. 25th October. Here we are. The Bank of Canada today held its target for the overnight rate at 5%, with the bank rate at 5.25% and the deposit rates at 5%. The bank is continuing its policy of quantitative tightening. What does it mean? When they say quantitative tightening, it means they are restrictive policy. The global economy is slowing and growth is forecast to moderate further as past increases in policy rates and the recent surge in global bond yield weigh on demand. The bank projects global GDP growth 2.9% this year. Okay, this is for the global. We need to. In Canada, there is growing evidence that past interest rates increases are dampening economic activity and relieving price pressures. Consumption has been subdued with softer demand for housing, durable goods, and many services. Weaker demand and higher borrowing costs are weighing on business investment. The surge in Canada's population is easing labor market pressure in some sectors while adding to housing demand and consumption. In the labor market, recent job gains have been below labor force growth and job vacancies have continued to ease. However, the labor market remains on the tight side of wage pressure persists. Overall, a range of indicators suggests the supply and demand in the economy are now approaching balance. Oh, here we don't any see the of the only quantitative tightening shows that the Bank of Canada is hawkish. CPI inflation has been volatile in recent months. 2.8% in June, 4% in August, and 3.8% in September. Higher, higher interest rates are moderating inflation in many goods that people buy on credit. This is spreading to services. Food inflation is easing from very high rates. However, in addition to elevated mortgage interest costs, inflation in recent and other housing costs remain high. Near-term inflation expectations and corporate pricing behavior are normalizing only gradually, and wages are still growing around 4% to 5%. The bank's preferred measures of core inflation show little downward momentum. In bank's October projection, CPI inflation is expected to average about 3.25 through the middle of next year, gradually easing to 2% in 2025. Inflation returns to target about the same time as in the July projection, but the near-term path is higher because of energy prices and ongoing persistence in core inflation. With clear signs that monetary policy is moderating spending and relieving price pressures, Governing Council decided to hold the policy rate at 5% and to continue to normalize the bank's balance sheet. However, Governing Council is concerned that progress toward price stability is slow and inflation risks have increased and is prepared to raise the policy rate further if needed. Governing Council wants to downward momentum to core inflation and continues to be focused on the balance between demand and supply in the economy. Inflation expectations, wage growth, and corporate pricing behavior. The bank remains resolute in the commitment to restoring price stability to Canada's. Here, they what they show uh, continue normal even. However, Governing Council is concerned that progress towards price stability is slow and inflationary risks have increased and is prepared to raise the policy rate further if needed. This is hawkish policy. This is the next scheduled date for announcing the overnight rate target is 6th December. The bank will publish full of the economy inflation, including risk to the projections in the okay. The next scheduled date for announcing the overnight rate target is okay. Though this policy of the October 25 was hawkish. This is the conclusion.